ARK Invest have released a new model that contains seemingly crazy, outlandish, very, very bullish price targets for Tesla. And we need to do a deep dive into that today. So just quickly, a bit of a background to ARK Invest. They are a firm that have been doing a lot of research into Tesla for a very long time. They are outwardly very, very bullish when it comes to Tesla, and they do spend a lot of time doing research. And I find their research to be quite thorough and quite interesting, actually. Now, whether you agree or not with their price targets and models is one thing, or even the timings that they actually buy and sell Tesla at. But one thing that our shareholders can get out of this actually is reading through their research and their insights. So let's jump in. So we basically have 3 new Tesla price targets from ARK Invest, and these are all 2029 price targets, so a 5-year timeline. So we can see here that the expected value is $2,600 per share by 2029. The bear value is $2,000 per share by 2029, and the bullish value is $3,100 per share by 2029. Now, the bear case is the 25th percentile and the bull case is the 75th percentile. This just means that in their view, there is a 25% chance that Tesla stock could be worth more than $3,100, worth more or equal to, by 2029, and that there is a 25% chance that Tesla stock could be $2,000 or more or less, by 2029. That's how they're viewing this model. But they are thinking that the expected value, which is the most likely, is $2,600 again in that 5-year time period, which is quite different to where we are now. Tesla stock is trading at about $178, I believe, currently. So they are thinking that it's going to go from that value all the way up to potentially over $3,000 a share in a 5-year time period. For something like that to take place, there needs to be some really big catalysts. But let's continue. We then get down to this image, and you can see that in this image, the model that they're using is predicting $350 per share by 2029 if there is no autonomy. So if Tesla are not able to solve autonomous vehicles, autonomous driving, then ARK Invest are thinking that Tesla stock in 2029 will be worth around $350, which is, of course, nowhere near even their bear target of, $2,000? Yeah, $2,000. This would be roughly a 100% increase in the stock price over a 5-year period. So this growth would be okay, but it definitely wouldn't be exponential. So what does this tell us? Well, it tells us that they are putting a lot of their value to justify the higher prices that they are thinking may happen into autonomy. They are focusing mainly on autonomy. And as we move through this model, this will become increasingly even more clear. And they did for their previous model as well. Obviously, this is an updated model, but in their previous model, they were also very, very bullish. They had some of the highest price targets out there. And a lot of the value in that previous model was due to Tesla actually having a running and valuable robotaxi fleet. That hasn't changed. This is still very much the case. And we can see that here. ARK estimates that 90% of Tesla's enterprise value and earnings will be attributed to the robotaxi business in 2029, as shown below. So let's just go to this image here and we can actually look at what we're seeing. So what we are seeing basically is that ARK Invest are thinking that the EV segment of Tesla, and you can see that by these percentages and images here, will become less and less as a percentage of the entire business as time goes on. So EV sales are going to become less impactful. That doesn't mean that EV sales are going to plummet and going to go downhill. No, it just means that all the other areas, mainly robotaxi here, are going to become so large that the EV segment, the sales, is just going to diminish slowly. Still growing, but diminish as a percentage of the entire business. And I have to say, I agree. I've been saying that for a long time. I think we are going to see an absolute shift. We're going to see a transformation happen whereby the way that we know Tesla now in terms of how they bring in their revenue is going to look very, very different in a couple of years, 5 years, especially 10 years' time. They then have this table where they have predicted the range of possible forecasts for each model. These are not fixed. So you can take a look at here. We've got the 2023 actual value as of time of making this table, the example bear outcome of 2029 and the example bull outcome of 2029 as well. So we can see what they're predicting for each of the different scenarios that could happen. But again, just remember, these are not fixed. So moving down into this model a little bit further, we can now see updates to ARK's 2023 Tesla model. So we can see what they've actually updated since the last model that they had, the last price targets that they released. So they've updated autonomous driving assumptions, they've updated the manufacturing growth rate, and the 2029 model considerations that are not key drivers of our price targets estimates. That's interesting. We'll see this as we move through, but let's just have a look here. Updated autonomous driving assumptions. We believe that Tesla will launch a robo-taxi service within the next 2 years, and that the probability Tesla fails to launch a robo-taxi service within 5 years is basically 0, as shown below. So they are considering that the likelihood of Tesla actually not launching this service at this current point, within the next 5 years, is extremely low. So they are just thinking that with all the improvements that Tesla's making in terms of the FSD technology and all the little breadcrumbs that they've given us, the ride-hailing app and all of these little nuggets of information, that they're not seeing a world in which this doesn't happen, especially in the next 5 years, but they're thinking that it's going to happen within the next 2 years. So 58% likelihood that they launch the robo-taxi service by 2025, 38% by 2026, 4% by 2027, and then these numbers become really, really insignificant. So they are very much basing this model on the idea that Tesla will have an up and running, profitable robo-taxi fleet very, very soon, extremely soon. And that, if that happens, that really does change the game, like I keep saying. So then they go on to give some information about how they are thinking that the robo-taxi fleet will actually run. And the important thing here is that, number one, they are saying that while unlikely, if we were to eliminate the possibility of a robo-taxi network from our model, our price target would be around $350. So, in the case that we don't see a robo-taxi fleet, like we said earlier on in the video, they are predicting the price target by 2029 would be about $350. Note that in cases where robo-taxis do not launch, Tesla could launch a human-driven ride-hail service for both strategic and tactical reasons, as we have analysed previously. So they see the possibility of an alternative human-driven service using the ride-hailing app without autonomy. So they are thinking that they could still use what they've put together so far and actually have basically a different competitor to Uber, but it wouldn't actually be autonomous. They are thinking that could happen, but it is unlikely. And then they go on to say, from a modeling perspective, we previously estimated that Tesla's take rate would be about 40 to 60% on average, higher than Uber's current take rate of 20 to 30%. Right there, I completely agree. They think Tesla's take rate will be higher than Uber's. I think it absolutely will be. We've just got to think of this logically. Tesla will be able to launch a direct competitor to Uber, but it will undercut Uber in terms of convenience, in terms of luxury, and in terms of price as well. And when they've got the data to back this up in terms of safety. Those 4 things are very important for consumers. This year, we fine-tuned our analysis to include the assumption that initially Tesla will own and operate its vehicle network, retaining all revenue per mile for the first 1 to 3 years. Now, I think Elon reinstated that they will do a split, so they will have Tesla-owned vehicles, but they also will have, that will run like Uber's business model, but they will also have a consumer-owned Tesla vehicles that can be added and subtracted to the fleet at any given time, and that will run more like Airbnb. We don't know what the split of revenue will be on the consumer-owned fleet. It's likely maybe 80-20, I'm thinking. Elon did say that the majority of the revenue will go to the owner of the vehicle rather than Tesla, but we don't know the percentages just yet for sure, and we don't know how many years Tesla are going to run and operate their own fleet before adding customer vehicles in. I don't think it's going to take 3 years, personally. Maybe 1 year or even maybe less than that. They then showed us this image here of autonomous miles run rate. And this shows us something very, very important. This shows us Tesla is significantly, without doubt, in the lead when it comes to autonomous driving data accumulation. We already knew that Tesla had the data advantage, but look, this is crazy. We can visibly see that no other company is even coming close. Like, I can't even see Waymo, especially Cruise. That's non-existent. Even when I zoom in, like, where are these other bars? Tesla is in the lead and then some. And look here, according to our research, Tesla is accumulating data at approximately 110 times the rate of Waymo. 110 times the rate of Waymo. That isn't even a close second. And remember, Tesla are going about autonomous driving in a very, very different way to other companies that will allow them to scale, that will allow them to be profitable, that will allow them to work off first principles. So I do think they have the competitive advantage in terms of data accumulation, but I just think they have the competitive advantage across the board here. This is important as well. Furthermore, our research suggests that a Tesla in FSD mode is approximately 5 times safer than a human-driven Tesla and 16 times safer than an average car on the road. No longer constrained by AI training compute, Tesla's accelerated software updates are enhancing performance and safety. These are happening very, very quickly now. It's actually now getting to the point where it's becoming harder to make these changes, to make these updates, to make these enhancements, because the amount of time that someone can now drive using FSD4 before they actually have to interfere with the system is getting longer and longer, which is what you want, right? It's getting better. But that just means that then Tesla are having to wait a longer period of time before they can then train on those iterations that need to happen. As a result, Tesla should be able to demonstrate superior statistically significant safety metrics and receive regulatory approval for its robo-taxi network. So let's have a look here. So what we can see is miles per crash on surface streets only in thousands. So we've got Tesla in FSD, we've got human-driven Teslas, we've got Waymo, and then we've got the national average, and then at the bottom here, on the right-hand side, we have got Cruise. We can see without a doubt that FSD is safer based on this research, based on their data, that the safer than human drivers. This is the point. This is the whole point in FSD. It will be safer than a human-driven vehicle. And humans make many, many mistakes. Humans are tired. They've had alcohol, which is obviously awful. They have distractions in the back with children, and this will all help build an image against any regulatory problems that Tesla may come up against. Because that will be the number one argument against FSD and against a robotaxi fleet. It will be, oh, but it's not safe. We can't allow people to go in these vehicles when we don't know it's safe. But Tesla will come prepared and have all the data to back this up to say, actually, not only are we safer than Tesla human-driven vehicles, but we're safer by far than Waymo, by far than the national average vehicle. It is a no-brainer. And look what we're seeing here. It's showing us that Teslas using FSD in 2023 had a rate of 1 crash per 3.2 million miles driven. And that human-driven Teslas had a rate of 1 per every 588,000 miles, which is still pretty impressive. So it's just showing us that FSD is safer than humans, as that was the factor change between those two. Waymo is experiencing 1 crash per every 476,000. So this is showing us that Waymo's robotaxi is less safe than humans actually driving Tesla vehicles, which then makes the argument of, okay, well, is there even a point in Waymo? Who knows? And Cruise are not doing too well here at all, 1 in every 43,000 miles. Tesla plans to unveil its dedicated robotaxi vehicle in August 2024. Yes, the robotaxi event on the 8th of the 8th of August 2024. That is actually coming up pretty soon. It will be here before we know it, especially now that we've had the shareholder meeting. That was very anticipated. We can now look forward to the robotaxi event. While Tesla could transform its current fleet into robotaxis, yes, so what they could do is they could just switch on their whole fleet to become a robotaxi fleet. If they wanted to, a lot of the vehicles have got the software necessary. They could switch it on and go. But ARC are saying, we believe a custom-built cybercab, which we've already heard this word being thrown around, cybercab, reflects increased confidence that its autonomy software will allow Tesla to scale the robotaxi business. We now know that there are 3 possible new vehicles that are currently being kept under wraps, being covered up in the images Tesla are releasing. So this begs the question, are Tesla going to unveil 3 new vehicles during the robotaxi event? If so, what are these vehicles going to be? We could assume that there's going to be a 2-seater cybercab. So this will be the autonomous vehicle, the one without steering wheels, the one without pedals, fit to be a robotaxi vehicle. Then we could maybe assume that there will be a version of that is the mass affordable vehicle, that 25k car or whatever it ends up being. that does have a steering wheel and does have pedals, but is pretty much the same, maybe. And then also maybe we'll get a larger cyber van, I'm going to call it, where we'll have a vehicle that can transport 8 to 10 people. Other people think that they won't see a cyber van and actually it might be the roadster vehicle. Let me know what you're thinking about that in the comments below, but I guess we're just going to have to wait and see. And then we look here. As a result, its business model should transform from a one-off vehicle sales to a recurring revenue base as every car becomes an AI-powered cash flow generation machine. What a statement that is. And that's exactly what I'm thinking that we're going to see. We're going to see this move between from what we're seeing now, where Tesla sells a vehicle, they make it for a certain price, they sell it for a certain price, they keep the difference, very, very standard thing. But they're going to move from that to a reoccurring SaaS level margin revenue business structure. And that changes the game. That completely changes the game and should increase Tesla's profit to a whole new level. Moving on to the next section, which is updated Tesla manufacturing growth rate. In our expected value case, after a flat to up year in 2024, vehicle production increases 45% per year through year end 2029. After this year, we expect that Tesla's ability to scale will be a function of management bandwidth and Tesla's ability to open new factories. As production scales from 1.8 million units per year today, which is still incredible, by the way, literally incredible, to 16 million per year, the law of large numbers should lead to lower growth rates. Robo-taxis likely ease manufacturing scaling by simplifying vehicles' designs, as well as generating additional capital from the highly cash flow generative rides, like we've just spoken about. Yeah, they should be really, really profitable for Tesla. They should be able to be very cheap for consumers, and Tesla shouldn't really have that many expenses in terms of these. We also expect that the most robo-taxis will be sold to fleet owners rather than individuals, potentially simplifying the sales funnel. So ARK are actually forecasting that the vehicle production is going to increase year on year by 45% to 2029, which seems really high actually when you think about how they already have a large base number, but it is possible. It definitely is possible. And at some point, naturally this will flatten out and slow down due to the law of large numbers, like they're saying. But they're also making the point about a simplified manufacturing experience. Yes, it should be much, much easier to manufacture. And also, you've got to think as well, will we have a situation where the humanoid robots, Optimus, will be in the factories helping with the manufacturing line, because this will save money and simplify as well. Who knows? And then an easier sales funnel in terms of actually selling a lot of these vehicles to fleet owners rather than individuals. That does simplify one person having a fleet and actually purchasing many of these at one time rather than trying to sell to, lots and lots of individuals. I think people are going to make businesses out of this, People are going to have Tesla robo-taxi fleet businesses where someone that has enough money will buy a lot of vehicles and then they will operate them, they will add them to the robo-taxi fleet and they will make money that way. And they will just maybe be in charge of the cleaning, the maintenance, the charging, things like that. So this next bit is really, really important. I think this is really interesting, and this is where a lot of people are going to differ in their opinion. So as we move through this, do let me know where you sit with this. So these are basically things that ARK Invest are not considering in their model. So Optimus, first and foremost, we assume that Optimus will have minimal impact on our price target. That is crazy because, like we've just heard from Elon Musk during the shareholder meeting, autonomy will take Tesla valuation to, it will add a lot to the market cap of Tesla if it all goes well. And then we have Optimus, which will be even more crazy, but ARK Invest aren't even including that in these very already bullish price targets. So that makes me think, what are ARK predicting when they actually do add Optimus into this? If they're thinking $3,100 by 2029 with just autonomy alone pretty much and the EV business and whatnot, what are they going to say the price target is going to be when they add Optimus in? Who knows? Over the next decade, we expect Tesla to become a leading manufacturer and service provider of robots that move through physical space, as it will have the opportunity to leverage learnings from robo-taxis, yes, because we need to remember that those two things link, as well as its in-house inference chips, training, compute, and manufacturing scale. We cannot underappreciate how far ahead of everyone else, even businesses outside of the automotive industry, Tesla are when it comes to scaling and manufacturing. It's a real moat that they have. Tesla expects Optimus to be completing useful factory tasks by the end of year. We've got some more information about this. They've already got 2 bots doing fairly useful work in the factories now. It's going to increase quickly, very, very quickly, in terms of how many there are and also what they're actually doing, how they're actually changing the cost of goods sold, the efficiency, the productivity, and so on. Assuming that it will be able to subsume 10-20% of Tesla's labor hours worked with productivity equal to or twice that of its human counterparts, Optimus could save Tesla $3 to $4 billion, or 1-2% in manufacturing costs in 2029. So they are expecting, by the sounds of it, they're very optimistic, they're very bullish. They are expecting, Optimus to be a contributor to Tesla, but they are thinking that that's going to happen later on. It's going to be robotaxi first, then Optimus is going to take the learnings from that and become a key driver of growth, maybe post 2029. So that's the important thing. These are 5-year price targets. They're not saying that Optimus is not a contributor or important. They're just saying that it won't take place in that time period. Let me know if you agree with that or not. Our research suggests that generalizable humanoid robots represent a approximately 24 trillion global revenue opportunity at scale. 50% of that approximately coming from manufacturing. So they are seeing the biggest use case of humanoid robots being manufacturing, which I think makes sense, but I do think that will change as time goes on. Manufacturing, I think, will be one of the early use cases before we move into homes and all different things like that. Should it decide to sell Optimus externally, Tesla could capture a significant share of this multi-trillion-dollar market. Through the meaningful commercialization ramp is likely to happen beyond the first 5 years captured in this model. So yeah, that's what they're saying. They're very bullish on it. They're just not seeing it happen within the 5 years that they're looking at for this price target. So then they go on to talk about stationary energy storage and how that's not really a key driver in this model either. And they've said here, if batteries are a limiting factor, however, Tesla is likely to prioritize robotaxis to generate a higher return on investment as shown below. So what this is basically showing us is that if there is a limitation in battery production or supply, they are thinking that Tesla is more likely to prioritize the production and deployment of robotaxis. And this is just because they are saying that robotaxis are expected to actually provide a higher return on investment compared to, their stationary energy storage solutions. I do think that the energy portion of Tesla will continue growing at a very rapid rate. I think it's going to do extremely well. It's not going to become as big as, robotaxi will or anything like that. But I do think it's significant. And, some of these things that ARC are not including, I personally would include. Let's just move on because there's some stuff here. So they are not including, completely not including, Tesla Semi. So Tesla plans to commercialize the Semi in 2026. We do not believe the Tesla Semi will contribute any meaningful value to Tesla in our time horizon. Now, I don't think it's going to be anything crazy, but what we have to appreciate is that Elon has just approved the plans to actually put the Tesla Semi into volume production. We are already hearing about all different companies, including Pepsi, big companies, wanting Tesla semi-truck vehicles. And this is because, like Elon said during the shareholder meeting, it's saving them a lot of money. Why would they waste money? Switching from a traditional truck to an EV, Tesla semi-truck, saves businesses a lot of money. And that's all they care about. They are going to make that switch if they are able to save money. So I very much expect this will continue to grow. Then we've got the supercharging network. Now, I won't read all through this. You can just pause the video and read it now. I don't necessarily agree completely. I think the supercharger network and business model will actually generate a lot of money. But again, compared to what we're anticipating with the robo-taxi fleet and all these other things, I do think it's going to be quite small in comparison, but I personally would at least include it. And then we have FSD licensing. Tesla currently is in discussion to license its FSD software to one automaker. We don't know who that is. People are thinking it's Ford, people thinking it's BYD. Leave your guesses in the comments. We'll soon find out, I'm sure. However, they are saying while potentially a monumental event for Tesla, based on traditional automotive design to production timelines, non-Tesla FSD equipped vehicles probably will not debut for years. So I'm quite surprised that this wasn't actually included in the model. But like they've said there, maybe it's just because it's going to take longer than a 5-year period. It's going to happen, but it's going to take longer. Automotive legacy companies may be just lagging with this a little bit, but I do think they are going to have to license this technology from Tesla. I don't think they're going to have a choice. Otherwise, I think they're just going to diminish, honestly. I don't think they'll be able to compete. And I do think this is going to be an area that will be a big driver in the future. And I can't wait to hear who the first automotive company actually is to license the FSD technology. And then we have AI as a service. Tesla plans to offer distributed AI inference as a service and dojo training as a service, probably is outside our 5-year investment horizon. So again, you can read this, but they're not including it just because they believe it will happen after this time horizon. But just imagine if they had included all of these things. If this price target was for 2030, 2035, 2040, and they had included all these things, those price targets would just get exponentially larger. It blows my mind a little bit. And then you have to ask yourself, well, what is your time horizon and what are you actually going to include in your models? Not everyone likes to do price targets, and you don't have to. You can be a long-term investor without actually properly having a price target in place, as long as you think the company is going to get more valuable in the future than it is today. And then we've got risks and limits of their models. So an unexpected event such as Elon Musk's sudden departure from the company or a natural disaster or pandemic could throw these outcomes off considerably. So Elon leaving the company is kind of the same outcome as a natural disaster or a pandemic to ARK Invest, which I suppose it kind of is, because his leadership really is driving the innovation of this company, especially in terms of autonomy and Optimus, which are the next growth eras of Tesla. So I do kind of agree with that, even though putting those three things in succession to each other does seem a little bit crazy. Let me know if you agree with ARK's price targets or not in the comments below. I'd love to hear your thoughts on this. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.